So in the absence of global liquidity, I don't think this market is going anywhere. So suddenly, to my mind, the bull case scenario is getting challenged. The bull case scenario was that central banks will continue to print more money, risk on trade will remain intact, and that will help a market like India. Vineet Bhatnagar joins us, Managing Director with MF Global. Vineet, would you agree with my assessment that suddenly the bull case scenario is getting challenged?
Yes, to the extent that the assessment that everybody had about the liquidity drive, which is going to take the equity markets higher and higher, seems to be getting more challenged and perhaps less feasible. To that extent, there is definitely a reversal of sentiment of sorts. At the same time, the other pointers that you just highlighted, which was the FII activity, especially after the August expiry, both in the underlying cash market as also in the Nifty F&O segment, is quite clearly pointing towards the fact that not only have they turned net sellers in the cash market, but also the open interest as far as the Nifty futures is concerned has turned negative. They were earlier reversing their longs, and from yesterday we have seen that a small amount of short sells have come into play, which will be in the region of about 400 crores odd, but that does point towards what could be currently going on in their mind. Having said all this, I still believe that there may be a case of a pullback, which may come about at regions like 5180, and I say this not only because it happens to be a Fibonacci number, as some of your chartists will also agree, but the contrarian indicator that we track is pointing towards a peaking out of capitulation, which happens usually at about 1.25 reading, and it is today, this morning, 1.15.
Vineet, what explains the weakness when it comes to the banking pack? Earlier it was just PSUs, but now even the private boys are not spared.
Yes, I guess it comes in round one, round two, kind of a characteristic. We have all noticed that when bank Nifty or banking sector in general was the bellwether for how the Nifty was to take clue between January and as late as July, both were moving in tandem. In the last month or so, there has been a disconnect in terms of the weakness that has percolated in the banking sector, but some of the other heavyweights such as Reliance and TCS and Hindustan Lever have kept the Nifty propped up, and therefore it has become a more difficult environment for traders to take the correct stock selection ideas. But as far as banks are concerned, there is that environment about low growth environment, the NPA related, concerns that have been highlighted even by the largest banks, and therefore that particular sector is under pressure both from PSUs who have been beaten down and also private sectors. But then again, if the Nifty pullback were to happen, as I was pointing out earlier, some of the names like ICICI Bank could show some relief.
Vineet, infra and FMCG, two ends of the spectrum. One is priced to perfection, other one is priced to bankruptcy. Which end of the market will correct? Will FMCG come down, or will infra improve from the low?
I think the backdrop that needs to be certain for infra to come back is definitely going to be a comeback of an investment demand or a capex cycle coming back for a surety, as against this willy-nilly kind of an argument or discussion about whether really growth is coming back or not coming back, or whether the interest rate environment has become conducive to the next round of capital expenditure to come back into the industry. So that has to be known for certain. As far as the FMCG is concerned, I think more of us will agree that while the simplistic approach towards FMCG has always been a defensive in an environment which is not taking the market anywhere, the factors that have led to a very smart price movement in names like HUL and ITC have been much beyond their usual defensive classification that we have all lived till date. So the factors that have worked in their favor have been the upbeat and robust rural demand that has outpaced the urban demand in India for the first time in the last 25 years, and also the inflationary environment that we have all been talking about and been worried about has actually not dampened that demand. So a combination of this has really led to that outperformance that looks so incredible and unbelievable.
Okay, Vineet, just hold on to that thought. 2 minutes left before we kickstart trade.